elect to buy that.
Pay cash?
Pay cash.
Not get a loan, pay cash for it?
Pay cash.
Okay.
Then the title is vested with the third-party administrator. The investor then sells the first property, and the proceeds from the first property can then go to reimburse the investor who just paid cash for the second property. It's a complex transaction, it's rare, and this is something that you would definitely want a third-party administrator who's done these before to handle.
Is there a time limit on that? If you buy the property, how many days or months do you have before you sell your investment property? So what if you can't sell it? What if you don't have a buyer to sell that investment property?
The timetables are the same. So if you bought the first property and couldn't sell the one that you wanted to sell originally within 180 days, there is no 1031 exchange. It is unraveled.
So it's unraveled, so the IRS won't allow it to occur. So then you're going to be buying just like you normally would, normally doing a normal transaction. Okay. Earlier mentioned a homeowner of a primary residence can do a 1031. Explain that for our viewers, if you would.
Okay. This would be a situation where the homeowner has lived in the property at least 2 of the last 5 years. They would...
And they've already used up their tax benefits. They've already used the $500,000 or the $250,000 if you're a single.
Well, there's been no taxable event yet because they have not sold the house. Remember that the whole...
What if they sold one previous to that, though? What if they've already utilized that within the past 5 years? Can you do it again?
They're allowed to execute a Section 121 exemption once every 2 years.
Once every 2 years, okay.
That's correct.
Very important for our viewers to hear that, okay.
So again, please understand that it's going to be a rare circumstance in which a homeowner is going to be able to use a 1031 because normally they want to take advantage of the 121, which is the $250,000 for a single taxpayer, $500,000 exemption for a married taxpayer.
How long has the 121 been around?
Good question. It's been, I don't know.
You don't know. Okay, not sure about that. Okay. All right. What if the investor does not want to manage real estate? What options are available to him at that point?
There is a relatively new investment vehicle called a TIC, T-I-C, which stands for Tenancy in Common. It's been around for about 5 years. And what it does is allow the seller of an investment property to invest money in this TIC. Now, what the TIC does is go out and buy...
Now, does he invest all the proceeds from the sale into that, or does he have to just pay out of his own money for that?
It works identically to buying a replacement like-kind property. That is, the profit from the sale of the first property would go to the third-party intermediary as before, and then the proceeds from the sale would then be transferred from the third-party intermediary to the firm handling the TIC, or the tenancy in common investment. Now, the benefit of the tenancy in common investment is it allows the seller to get out of the business of fixing toilets, worrying about rent collection, making repairs. The TIC will go out and buy large properties in the tens of millions of dollars. For instance, ones that I've heard about recently have been student housing at the University of Oregon. Another one has been a large office complex in Omaha, Nebraska. So the TIC acquires the property, syndicates it, sells little shares to 1031 investors around the United States. They also manage the property, and typically the tenants are blue chip, pay their bills on time, and this becomes a pretty stable investment for the 1031 investor.
Where does one go to find, show the mechanics for our viewers, where do you find a TIC? A tenancy in common, as you would say. Where would you go to locate that?
There are brokers that specialize in selling TICs.
Real estate agents?
No, these are not real estate investments. They're security investments.
Okay. Where would you find them? Would you go on the internet? Would you ask your agent? What's the mechanics of finding a TIC?
You'd have to go through an investment advisor that specializes in tenancies and common investments.
Okay. Okay. Can the investor defer the capital gains forever?
Theoretically, yes.
They can, by continuing to do the Starker exchange.
That is correct.
But at some point, they're going to want the cash. That's the whole purpose of doing it. And at that point, they're going to be taxed just like anybody else would, correct?
Very much so.
Okay. How many times are you allowed to do it? Is there a limit?
There is no limit. As long as you follow the rules closely, you can do it an indefinite number of times.
What would you recommend to our viewers who wanted to undertake or start the process of this? Where would they go? Would they contact their agent? Where would they go to find out more information?
There are two key sources of information for them. Number one, talk to a real estate agent, a good one, to make sure that there is something that they want to buy. That agent or agents can assist them in making sure that they know what their property that they're selling is worth. Secondly, they should talk to their tax advisor.
Okay. Now you hear in the news today all about flipping properties. Someone who wants to buy a property, go and fix it up, turn around and make some quick cash. Would that be an effective tool for someone who just wanted to flip a property?
If they've made a nice profit, yes. If the profit is small, the 1031 exchange is probably not worth the effort. But if they have a nice profit, and they think they want to do another flip play, 1031 is a great tool for that.
Even for someone who just wants to buy their neighbor's property, it's run down, fixed up, and sell it for quick cash, but they have to identify the new property, correct?
That is correct, within 45 days of the time of going to settlement.
I thought you said 180 days.
Now, to identify the property, they have to identify the replacement property within 45 days. They have to go to settlement on the replacement property within 180 days.
That's very important. So you identify within 45 days, and that's before you sell the investment property, correct? You have to identify a new one. Before, can you do it after?
Yes, you can. Remember, the 45 days is either before or after settlement. So there's a 90-day window.
Okay.
Now, here's another nice thing.
Please.
The seller of the investment property can designate up to 3 replacement properties. And that's to account for the fact that perhaps by the time that he or she goes to settlement on the first property, the property they wanted to buy to replace it is off the market. So they can nominate 3. And they have to pick one of those 3.
What happens if they pick 3 and don't end up buying any of those 3, and they identify yet a fourth property, but they're still within the 45-day time limit?
They're going to have to ask the third-party administrator that question.
Okay, all right. Well, we only have a minute left, but share with our viewers a little bit more. Where can they go to find out more information, and who do you recommend they speak to in this situation?
Again, the role of the real estate agent is to assist in making sure they know what the property that they're selling is worth, to help identify replacement properties. So the realtor, or one or both realtors, very, very important, because you have to have a plan. If you don't have a plan, you should not try to do a 1031. Then the tax advisor is also key. So the seller of the investment property needs to know exactly what the tax ramifications are, and if they have a plan, then it can be a very, very profitable transaction.
Would you recommend to our viewers that they utilize a real estate agent and or title company / attorney who are experienced doing these things? Can things go wrong for inexperienced people involving themselves in this transaction?
It's very easy to screw up. 1031 exchanges are complicated, and that's why you need people that know what they're doing, that have done them before.
And if you drop the ball, there's a lot of money involved here. If someone makes a mistake, the IRS will unravel the transaction, and you're going to have to pay capital gains on the sale of that investment property, correct?
That's absolutely correct.
Okay. Well, Charles, thank you for being here. We really appreciate you taking the time.
Mark, it's been my pleasure.
Okay. I'd like to thank our guest, Charles Sullivan, for being here today and sharing his expertise. Now, we realize we've just thrown a lot of info at you and that you may have questions. If you do have some questions, please visit my website at markrigney.org, or you can email us. Our emails are listed on the screen below. We will read and answer some of your questions on our next show. On behalf of my friend and colleague, Charles Sullivan, thank you for watching Mortgage Solutions with Mark Rigney. We will see you next time.